final of the business strategy series that we've been running for the month of October, and it's the end of the month. So next month, we're going to be starting with a new theme, and we'll let you know what that is. But this is the last part of business growth strategies. So as a bit of a recap, we did an introduction. We looked at the purpose of a business. What is the purpose of your organization? We got you to write out a number of purpose sentences that seem to match up with why your business exists, why you started the business in the first place. And that sets the scene for all other strategies going. It's like your true north or your autopilot. Everything else needs to be headed in that direction. And last week we had a chat about people strategies, the different groups of staff and suppliers and associates, and your product strategies about diversification and upselling. And we went through a handful of strategies that should be second nature within any business. And today we're going to briefly look at processes and profits, and two areas of businesses that are really interesting, looking around and saying, well, where are you in your business and what are you doing around these? So there's no fixed strategy, there's no stuff there, but there's questions that you should be asking in management meetings that you're having, right? So let's look at that. So what is a strategy? A strategy is an action plan to get you from here to there, and the assumption is that you know where here is and that you know where there should be. And those are key things there. So once you know where you are and you know where you want to be or that you have to be, the strategy is the reversed engineered played forward of there to here and here to there. Got it? Simple. Okay, and the strategy consists of a number of things. This is a kind of an overview of what you can be expected to tick all the boxes when you're creating a strategy. It's got a vision. A vision is there. You know where you are, you know where you want to be. That's your vision. You split that vision into different focus areas. It could be by segmentation of your organization, different focus areas within the business, different product lines, different groups of staff, different teams, whether they slice horizontally or vertical. And in each focus area develops goals, and those goals then have actions. And the key here is to have wildly important goals, and those wildly important goals are goals that are just more important than anything else. They're not exclusive goals. It doesn't mean that you only focus on the wildly important goals. You focus on all goals, but you focus more effort on your wildly important goals. And that really is a strategy, a simple overview of what could be and often is a very complex thing. Depends on the size of your organization and depends on the complexity of what you're running at. So let's just talk briefly about processes. Now, I'm a graduate of the project management kind of sector, spent far too many years in IT and ran as a program manager, project manager and stuff. And my time at IBM, we were all certified as project managers under this MITP tool that was and this was way before Agile came onto the horizon, but pretty much had its roots there. So understanding what is a project, and we used Microsoft project management tools and Gantt charts and all the different flows, identifying critical paths and resources and budgets and that. And the guy, we remember at a workshop once, we were sitting there and he says, everything is a project. Treat everything as you do. Everything that you do is a project. And it's interesting that it was the mindset of a lot of us, because, whether you're, he said, literally, if you're changing the toner in the printer, treat it as a project. What is the desired outcome? What are the steps? What are the resources? Who are the people involved? What's the timeline? What's the budget? And you kind of reverse engineer that back there and then just play it forward. And it's a simple mindset. A lot of good project managers, a lot of good think tank people or mastermind groups think along these lines, as it's simple and becomes second nature. For a lot of people, it's not. A lot of people seem to bumble through life accidentally. They get to a point where they, okay, well, we're just doing this and we're bumbling on and we're going forward, and it's just kind of happening accidentally. But it's very important to treat everything as you do, that you do as a project, and you're then able to get forward momentum. And the key thing is here is that if you're a small business owner and if you're a small team, you're going to make things up as you go along. And that's all right. And you can make things up as you go along. But then if you have to ever repeat something, then write down the steps that you're taking. The simple sort of thing is that, whatever you keep in your head, other people do not know. So share the knowledge, share the wisdom, and share the steps, because as you get other people to do the jobs that you've invented, that you're doing as the business owner, as the business grows, so then you have the confidence in getting other people to do it. Why? Because they're following the steps that you've written down. And a nice example, the best example comes from the fast food industry, is that a Big Mac will taste the same in Cape Town as it does in Joburg, as it does in London, as it does in Frankfurt, as it does in New York and San Francisco. And a Big Mac is a Big Mac is a Big Mac. Why? Because there's a process on how to make a Big Mac. And no matter where you go in the world and you have a hamburger made from a franchise, they taste the same, they look the same, they feel the same. And they are the same because there's a manual and there's a process and there's a machine related to that makes the fast food exactly the same way. And they can only be a global footprint company if you have a process that is able to be replicated flawlessly. And how big is your business on developing processes? Now, we're pretty good at some areas and we fall short in others, but we've got a process file, we've got a process library on our server, and it's got all the different processes we can go look up there. So whether I want to, add airtime to the phone or hand out keys or do a VAT return for one of our clients or year-end accounts or open a new client folder, there's a process developed and process written out that we follow, and if I do it or someone else does it, it's done the same way. And it means with confidence that I don't have to be in the office and I know that things are going to be done right. And the business can grow bigger than the owner's knowledge and wisdom that we tend to keep within our heads. And that is absolutely key. So the strategy around processes is simple. Write it down. Get it down on paper. Write it down and develop a process manual that can be replicated, and then you've got to share that process manual with the people that are involved. It should be, last week we spoke about what's your onboarding process for your new staff. Well, a lot of that is read the manual. If you buy a McDonald's franchise, the first thing that arrives is the set of manuals, not the hamburger patties. It's the set of manuals, and you go on training and you know exactly how to do your finances and make a milkshake and make a burger and do the fries and everything else that they sell. Even before you get the keys for your store, you get trained in the processes of flawless replication and to be able to do that. So your business cannot grow unless you have a process strategy within your business. It's as simple and as easy as that. Get it done, move on and get it done. The good time, if you've got quiet time over Christmas period and it's your downtime, and for some companies it's a real low for the next couple of months, this is the time that you can knuckle down and start developing your processes and developing these things and getting them right. Okay, let's jump on to the strategy of profits. Well, this is an interesting one, and I'm not the right person to be talking about this, but let me share some of the things that I've learned here. Is that this is one of the lessons that I've learned, and one of the lessons that we teach now is the money in your business is not yours, and you and your business are two separate entities, even if you are the only person employed there. And if you're the sole person, you're man alone, you're self-employed, you're the only one in your business, the money in your business is not your money. It belongs to the business. If you loan money from your account to the company account, it's a loan that the company needs to pay back. If you take money out of the business into your account, it's a loan that you need to repay the business. And understanding that is quite an interesting sort of thing. We've had a number of clients that kind of lived out of the till. So every night they went home, they just grabbed a handful of money to buy food on the way home. And when they needed lunch, then they grabbed money. And then when they paid suppliers, they just had money in the till, or they used the money of their wallet. And it became very, very blurry, and their company didn't do that well because we couldn't plot anything financially. We couldn't move forward and get things correctly reported on. So the key strategy here is to learn a little bit about the money. If you are vague and as ignorant about accounting as I am, then please, please, please get an accountant. Find a bookkeeper. Find somebody that can help you out there. Use one of the software systems. Most of them are free, if not a handful of money every month to use. They link to your bank account and they can do that. So the first key thing, start a business, open up a separate bank account, channel the money into the bank account for the money, for the business. You have your own account, separate that right from the scratch there, and then shop from the appropriate accounts. If you're spending money for the business, shop out of the business account. If you're spending money for yourself, shop out of your account. Pay yourself monthly. Keep records of what you pay yourself. Pay tax on that, and you're going to find that as you grow, it's going to be so much easier. It's very hard to untangle a business that has been running for a number of years that has all this kind of merged money, and there's no record of it. There's slips that you have in your wallet or in your car, in your bag, or in the side door of your motor car, under the floor mat, or in a box somewhere. Make it easy for yourself. Develop a strategy around your profit and know what money is yours and what money belongs to the business, and get that right. The other little saying there is, and this is one that I've seen a lot of other people learn a very harsh lesson on, is that the turnover is not income. Okay. Turnover in a business is not the income that you want to talk about. It's profit that you want to talk about. And having R1 million turnover in a business doesn't mean that you're R1 million business. It could mean that you're a 10 Rand business. It depends on your margins, depends on your cost of sales, and depends on what the business is expenses on going there. So be careful not to go there and get a mindset that you're R1 million company, or you're a 100,000 Rand company, or you're a 5,000 Rand company when you're not making that. It's interesting. There's so many people, one company that just, it's like 54 million Rand in 1 year that they've turned over. And they market themselves as that type of business. But if you actually look at their business, 99% of that money is money that's just bouncing in and out of their account. Their value is very minimal in that. So be careful not to let your turnover number get in your head and you think that you're wealthier than you are. You understand what I'm trying to say there is that there's a big difference between the two, and you must just be careful between turnover, income, net profit, gross profit. Know the difference between all these numbers and understand that. So chat to somebody who can help you with your reports. Chat to somebody to manage your cash flow and stuff. Don't go there and turn over, sign a big contract for like 5 million Rand and then go out and buy a motor car based on the turnover of the contract and not on the profit. And I've seen somebody in very specifically fall hugely short of that. Spent the money, they got a big payment up front, spent the money, and then realized, he had to buy the goods with the money. Now he's short, and the next company income didn't come in, and he got himself into a whole lot of trouble. So remember, the money is not yours, it belongs to the business, and do not get the turnover number into your head if you're wanting to go out and spend. Look at your cash flow. Cash is king, and cash needs to be managed as such. Some simple growth strategies, nothing profound and nothing great this week there, but if you get these wrong, the impact is huge. These are just lessons that we've learned both here as well as through our clients, and we've seen some people crawling here, bleeding and weeping because they've got these things incorrect and they've got them, and it costs many months of hard work and often huge amounts of expenses to get your business right if you're getting these things wrong. So learn how to develop your good processes, develop good financial strategies, growth strategies in there. Employer, an accountant, a bookkeeper, outsource it. We'll do it for you, and we'll then sit down with you on a monthly basis to help understand what your numbers mean. Where's your profit? Where's your margins? Where's the area of your business that's performing well? What's an area of your business not performing well? And develop financial growth strategies together with the others that we've spoken about. So we're going to leave you there. This is the end of the series, and we've covered all 4 of that, even though this lesson is probably one of the shortest ones that we've done there. Next month, we're going to chat a little bit more about finances, and we're going to get that going. And specifically, what are you doing about your finances to survive the holiday period? And we've got holidays coming up, and it's often a good period for some of our clients, some entrepreneurs and small businesses. If you're in hospitality and entertainment, it should be a good couple of months. If you're not, then it's a bad couple of months, and we want to just chat about what you can do around salaries and staff bonuses and leave pay and some financial stuff and planning to ensure that your business is still around here by January. And you can join in us for more webinars next year. So next month, you've got some stuff. We'll advertise it on the various platforms, but we're looking forward to getting you here. And we welcome any questions or comments, either here on Expertise or on our blog or on Facebook, wherever you're watching this. And thank you very much for joining us on Business Growth Strategies. May your business go from strength to strength. My name is Bruce Wade, and you can get hold of me at bruce@emsolutions.co.za, or pop by our website and go see what we're all about. Subscribe to our blog. We'd love to have you on our mailing list, and you can get free weekly information about ideas to grow both yourself and your business. Thank you very much for joining us. We will chat soon, and we look forward to having you on board one of our webinars or one of our workshops, or you can meet me or Michelle for a one-on-one and talk about strategy for growing your business. Cheers for now.